the CPI number, the consumer price index, inflation numbers have come out rather encouragingly. And we've got Indraneel Pan, who is, of course, the chief economist at Kotak Mahindra Bank, joining us now on the show with his take on what he's reading into those numbers. Indraneel, thanks very much for joining in. You know, encouragingly, it's a second month on a trot that we finally got the inflation numbers easing off. The headline number as well, that's at 9.3% versus 10.3%. Is it in line with what you were expecting?
We were actually expecting a single-digit number, but it was higher than the 9.4 that has come out. We were expecting about 9.8. So from that perspective, definitely this is better than what our own expectations were. But I think the key issue that I'm noting is mainly the food prices having come down. So that, to a certain extent, will also possibly be able to bring down the WPI, but likely to be by a lesser extent than what it has brought down the CPI by. Overall, the inflation atmosphere is appearing to be relatively more benign in the start of this financial year than the last.
Also, Indraneel, now RBI has been concerned on the suppressed inflation. What is your view?
Suppressed inflation issues in India are quite long-standing, no doubt about it. We have seen diesel price increases having happened. We will probably also see the coal prices and electricity prices likely moving up in this year. So they would obviously be sort of setting the floor in terms of the pace at which the inflation can come down. But I think overall, if most of the other commodities in terms of the core inflation numbers, the manufactured inflation, the commodity price inflation that we were seeing probably last year, if those remain on a manageable trajectory, then probably we'll have a relatively more benign number in this year than the last.
You know, tomorrow, of course, we're also going to be getting the WPI inflation number. What is it that you're expecting from the numbers tomorrow, especially, you know, and also I'd like to, you know, ask you a question on the diesel price hike that we've had take place over the weekend. How do you see that impacting the inflation trends over the next few months?
Diesel price might not be impacting the CPI immediately in a very significant way. WPI, it will, but we have already sort of to a certain extent factored that in. Overall, for WPI next month, we are looking at 5.10, which is relatively better than the street and a significant drop even from the last month's numbers. To a large extent, we have been expecting, as has been also reflected by the CPI, that the food prices are coming down. Globally, expectations are of food output being larger. Domestically, also, we have a positive monsoon outlook. So we are looking at actually inflation coming down all the way till about September. But September could be a crucial point given that the base effects will be out of the picture. We will probably see some amount of currency depreciation bias coming in because we are more expecting risks globally to play out significantly post-September. So that is the period to really watch out for. But till then, I think we are getting more confident that inflation is on a downward trajectory.
Also, Indraneel, would like to know your expectations from RBI over the rest of the fiscal in terms of repo and CRR cuts?
At this point in time, I think we are looking at another 50 basis points in terms of the repo. The next one being on the 17th of June and followed by another 25 on the end of 29th of July. On the CRR, I think the RBI probably needs to take a very calculated view on the CRR because, yes, they are struggling with liquidity. Yes, the whole system is struggling with the LAF being on the negative 1 lakh crore for a significant period of time. But the point I think that the RBI has also been making is that these are more frictional issues and not structural, in the sense that the government is still holding almost 50,000 crores of rupees with the Reserve Bank of India, which is creating this liquidity negative bias. So they will probably use OMOs at this point in time, and probably the CRR could be used around starting from around June or July, and we might be expecting a 50 to 75 basis points on the CRR. So for the rest of the financial year, 50 on the repo and 50 to 75 on the CRR is our current expectation.
Indranil, would just like to dwell on the food inflation aspect a bit more, because that's one of the critical components, and that's also governed quite a bit about, governed quite a bit with how the monsoons also pan out. So far, at least, the Met Department has come out and said we will see normal monsoons. In case that does come true, you did say, by September, of course, we could see CPI levels falling even further. But in case we do have an aberration as far as monsoons are concerned, what sort of trajectory would you build in on food inflation front?
I think it's a very difficult question that you have asked, and I really don't know how to answer this. But definitely, the point that I was trying to make is that we are, and that really is reflected in the way we have sort of estimated the RBI in terms of its reaction curve. So we are clearly anyway saying that till September we are looking at a softness in inflation, and post-September the inflation trajectory could actually turn. Now, when the turn in the inflation trajectory comes, the RBI definitely is unlikely to react, which necessarily means that we are putting every reaction of the RBI more in the first half of the financial year than in the second half of the financial year. So even if it turns with a poor monsoon, the trajectory may actually be a bit higher, but it really might not be able to change the reaction or it might not be able to sort of change the direction of the interest rates in India. RBI will at that point in time at best remain on a pause rather than emerge on a hiking cycle is the way we need to put it.
Okay, would also like to get your thoughts on the currency pack. Now, rupee has declined further at over 5-week high. What's your view on the rupee in near term?
No, I think the Indian rupee is clearly participating in the dollar strength story, which was our core story for a significant period of time, and therefore we were not really getting enthused by various flows that are likely to come in the first quarter of the year. For example, the HUL, the Bharti deal, etc. And clearly, I think the bias for the rupee remains on a depreciation side for us. The risks emerge more on the trade side rather than the capital flow side. Now, what I really mean is that there is still, given the slowdown in growth globally emerging once again in a very strong way, the risk that the exports underperform is more significant than imports coming down very significantly. Now, I was just looking at one data point which actually talks about 118 tons of gold being imported in April. So with the prices of gold being on the lower side, I'm not really sure about the fact whether it will actually have, in terms of the elasticity of the price to the demand, whether it will be beneficial to the CAD or not is something that really remains a question in my mind. Plus oil, we have been sort of factoring in oil to have come down. But if you really look at the trajectory of oil, it has bounced back and it's within the 100 to 105 bracket, which is where it needs to be. So I think the risk on the current account side is still quite strong, with capital flows still now supportive. But if global risk aversion is the story that we are trying to paint, then the window of opportunity for the balance of payments is very limited. So I would always play the INR from a depreciation bias.
All right, Indranil, we'd let you go on that note. Thanks very much for joining in with your quick take on the inflation numbers, which the market also seems to be taking in quite positively. At least we've seen a recovery from the lowest point of the session. So it's about just 22 points off for the Nifty at this point in time, 6,085. The names in terms of the big movers remains largely unchanged. You've got the Sensex as well. That's off by about 94 points. ITC, BHEL, TC are still trading under pressure. However, remember that at least the broader markets are, haven't seen that sharp a cut as the frontline names.